This week brings a very interesting update in the negotiations between Republicans and Democrats in Washington to debate what that next round of stimulus might look like on the coronavirus relief front. This week, Senate Republicans introducing legislation of their own that's even smaller in terms of a dollar size than what they initially offered in negotiations. Just a fraction as well of that $2.2 trillion level mark that the Democrats drew in the sand. And the interesting update in terms of this bill that Republicans are putting forward for a vote that could come as soon as Thursday is shrinking the amount of money that was given to the Federal Reserve back when the CARES Act was passed, looking to pull back some of that money from the Fed, neutering, I guess you could say, what they're trying to do in terms of their own stimulus initiatives. And here to discuss that with us is Yahoo Finance's Fed reporter, Brian Cheung. And Brian, I mean, to be fair, there's some money there that hasn't really been touched or used yet by the Fed. So what are they looking to do?
Well, Zach, a number of focus on the new, what they call skinny relief bill that shows, well, first of all, there's going to be no aid to state and local governments in addition to additional unemployment insurance benefits. But something that may have been a little bit missed in the conversation were changes to the Federal Reserve and the U.S. Treasury's $454 billion pot of money that they were using to set up its liquidity facilities to backstop a number of financial markets to make sure that the COVID crisis didn't evolve into a full-on financial crisis in March and also in April. Keep in mind, the Federal Reserve's only used a portion of that $454 billion, but this bill, as proposed by the GOP, would slash that $454 billion to a much smaller $250 billion. The GOP says it wants to repurpose those funds to do other things. And we actually had Indiana Republican Mike Braun saying on an earlier program here on Yahoo Finance that, quote, it was totally underutilized, end quote, which underscores the GOP's frustration with the Federal Reserve maybe not using that large pot of money that they were originally given under the CARES Act. But another important note is that the program would also prevent the Federal Reserve from using any of its emergency lending facilities past mid-January, although the Fed would be allowed to manage and modify any sort of loans that were made before January after that date. The concern, though, is that this would really hobble the Fed's ability to ensure that markets don't get out of control, things like corporate debt or municipal debt, and that the central bank's backstop simply won't be there after that point in time. Keep in mind, the Federal Reserve does not expect a full recovery by the end of this year. We had the Cleveland Fed president on Yahoo Finance a few weeks ago saying the economy is still in a deep hole. Now, for what it's worth, we don't know the odds of this passage of this GOP proposal. It's probably unlikely that it'll pass in this form with the Democrats in the White House still negotiating, but it is worth mentioning and speaks to the GOP's approach to how they view the Federal Reserve and the Treasury's response to this crisis so far. Zach?
Yeah, at least potentially one offering up there for the chopping block in terms of negotiations, making it very clear that there is money there to claw back from the Fed. But interesting, we'll see how that one all plays out. Brian Cheung, appreciate that update.